let's have a quick review of what happened last week. I've just opened up the FT page here. That's not for any other reason apart from just to focus my mind a bit. FTSE, we were up about 100 points last week, all in all. That's not a bad performance. Thursday, Friday wasn't so good, but not as bad as in the US. I think that's about 1.7% higher on the FTSE. The US, as I say, a different story. The Dow, having had a good start to the week, obviously 205-point fall on Friday, along with the S&P and NASDAQ. NASDAQ was particularly weak, but that was unchanged to maybe 15 points higher, the Dow, so that's just 0.1% higher. Gold didn't have a good week at all. It started weak the previous Friday and really carried on. I think we're over $30, $32, $35 weaker last week, down 1.8%. The euro, sort of ended on a weakish note, didn't it, on Friday? But actually, it was still up on the week. We're up about 90 points, or sort of 0.7%. So again, it just sums up the mixed news, really. Last week, I don't know whether you've recalled, we had that Chinese GDP data, which on the face of it looked pretty poor, but actually, I think most commentators, including Wen Jiabao, the Chinese soon-to-be ex-president of the People's Republic, he offered some useful support to that as well. But actually, we had some fairly contrasting numbers as well. I don't know whether you remember, we had that. Let's just put up my calendar. We can actually click on last week's. If you remember, last Thursday, we had two important bits of data there, the unemployment claims and the manufacturing index for one of the largest federal districts, the Philadelphia district. A lot stronger from the Fed, Philly Fed manufacturing index, 5.7 versus 1.3. But unemployment claims, I don't know if you recall, I remember telling you the previous week we had a problem with the data, or it excluded one state apparently. Anyway, that has corrected itself. So a little bit muddled, really, to be honest. But I certainly think overall, looking at the way the market's behaved, a lot of the 4-hourly charts had sort of rolled over Friday. The FTSE is looking a little bit weak, as I'm sure you know this morning. A number of the currencies as well have rolled over. Obviously, being a 24-hour market, the 4-hourly chart on the currencies does put in a lot more bars than a stock index that is only open from 8 in the morning till 4:30 in the afternoon. Okay, so trend change, well, possible. Again, it just sums up the way I'm talking is really the way the market's behaving, isn't it? Is it a trend change? Will the risk on turn into risk off? It is not clear yet. That's the point I'd make. But last Friday was undoubtedly the key day. As I said to you, 205 points on the Dow, and the dollar rallied pretty much in a bout of profit-taking on shorts, really. And the key reason was earnings. I'm putting up the FT page here now. I think that a lot of those stories have left the front page by now. But we had the earnings from Microsoft and GE. They all missed. And Google, what a complete cock-up that was. The Google printers have now retired and gone to Bali on the back of their proceeds of shorting Google. But Google, Microsoft, and GE, three of the top 10 companies in the US, all missed their earnings, which is one of the reasons why we had a major rout. So really, my comments at the start of last week, and I guess on Thursday as well, are pretty much relevant now. Optimism. Can this be maintained? We need some hard evidence to support further gains, etc., etc. So why don't we now just focus on this week's data? I heard Adrian mentioning to you about the Japanese export data. That is something that is on our front pages. So if you look at my calendar here, we've got the trade balance. So that is something that came as some surprise this morning. And I'll just flick to the FT here. Chinese exports hit by China dispute. I don't know whether many of you know about this dispute between Japan and China. Funny thing is, it just sounds not hugely relevant. There's these islands in the East China Sea that there's a dispute over, and it's actually caused the Japanese exports to China to be hit quite sharply. And actually, what it is, it risks now that the Japanese economy could actually dip into recession. And well, I'm sure Adrian's probably shown you. If we look at some of the yen crosses, have we got any yen? Yeah, look at the euro yen. Let's see. Look at that. So this news came out at 1 o'clock this morning. So anyone who is trading the a yen pair, whether it be euro yen, sterling yen, dollar yen, that's a very good reason why you've got to really follow these bits of data, these key data points very closely. You don't have to follow all of them. Obviously, if you're trading the yen, just follow the yen announcements, yeah? Okay, let's flick back again. I'm now going to flick back to our calendar. Let's look at the data for week starting the 22nd. Pretty light at the beginning of the week, to be honest. And in fact, the data really doesn't kick off until Tuesday is our first one. Retail sales in Canada, but also we've got interest rate decisions in 2 countries this week. The central bank policy meetings in Sweden and Canada and New Zealand, in fact 3. But certainly Canada is probably the key one for most of you guys if you're trading Euro CAD or Dollar CAD. The Bank of Canada is not expected to do anything to its interest rates. They're expected to keep it at 1%, although it's expected to shift from its hawkish bias. Hawkish bias means, not going to cut rates to a more neutral stance. So if a bank is hawkish, it's particularly focused on the job of keeping inflation in check. A more neutral bias or neutral stance suggests that possibly you could have a cut coming in the following months. Okay, so that is what's happening on Tuesday. As again, not a particularly important day, but everything really kicks off on Wednesday. We've got a lot of data out. The first bit of stuff that I'll talk about is the manufacturing PMI. This is important. Germany is especially important because German manufacturing is what keeps the euro together. We've got this data out, German flash manufacturing PMI, that stands for Purchasing Managers Index. That's the way they collate the data from that area, which is a good leading indicator. Anything above 50 is expansionary. Anything below 50 is in contraction. And you will note that in comparison to the US, Europe, even Europe's strongest economy, Germany, is still in contraction. 48.1%. It is better. Germany has increased momentum in its manufacturing sector, although the number is below 50, so it's still contracting. Overall, what they do is they put together a Eurozone Purchasing Managers Index out of all the countries, and it is expected to show some improvement from 40, rising to 46.5. Let's just get to that. It's got a euro. So this is the data here. There's flash manufacturing for all the countries, 46.6 from 46.1. But again, just to confirm that, still below 50, still contracting. Other than that, on Wednesday, we've got this EFO. This is a business climate index, and I'm just going to dig it out. It's here somewhere. There we go. 9 o'clock. This is the Business Climate Index. It's closely watched. We discuss it every month. For those of you seasoned campaigners in here today, you'll know that it's a very broad index and highly regarded. And the index hasn't risen for the past 6 months, but on Wednesday, we're expected to see the first increase to 101.7 from 101.4. So, maybe,